Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month nickel, zinc and tin.
LME 3-month nickel. I've said repeatedly in this commentary that the most significant feature of this market in recent weeks has been, and still is even now, the very significant lows of 2021 at 15,665, which led to the lows of late November 23, plus the lows in 24 in January, February, with some mild finessing the lows of late July and early September, down in the 15,840 and 15,600 zone, and most recently in late October, November, December, and January now, and February this year. It is at this point I feel obliged, once again, to mention the big descending scallop pattern I've been going on about for months and months, what it may mean within the near-term universe. So the key level has been, and still is, the lows at 15,840. A significant move below this, and by that I mean you would know it when you see it, a significant break below this would give a downside potential for the descending scallop pattern of target X down in the 13,830 zone. It still all comes down to what the market has done and whether it has finished fondling the key 15,840 zone. I suspect with the crossover of the breached bright red May 2024 to date downtrend currently at 15,230 down through the dark blue neckline currently 15,860 of the July to November 2024 head and shoulders top pattern back at on the 13th of January, that it may have finally started that move lower. The next issue is whether the November 2020 low at 14,935 will retain prices higher as it did at the end of December last year and January this year. The one feature left to discuss is that the July to mid-November 2024 head and shoulders pattern. I said on this pattern last time, and I quote, "I do not have great confidence in this pattern and is not only pretty scrappy as a pattern, but that it is also in the wrong place at the lows of the market. However, it is still a possibility and I feel obliged to notify you of such a possible pattern, especially as the neckline is so close to the important 15,840 lows." End of quote. Today I view this pattern with a more, how shall I put it, friendly eye, and thus I feel obliged to lay out some potential targets below for this pattern. Thus the primary target X1 will be down in the 14,250 zone. For secondary, harder to reach target X2 I should say, down in the 13,250 zone. LME 3-month zinc. Much like LME copper and LME aluminium, there are a number of patterns here that have made themselves known on this daily chart over the last few weeks. Some I've previously mentioned, some have recently appeared, and some, well, they became evident when I started looking at the longer term charts. I'll start with the patterns I've already highlighted, notably the broken and breached, but still refusing to die, old dark blue upper time above, currently at 29.11, and the middle time below, currently at 27.46 of the May to August 2023 bullish shift pitchfork that subsequently acted as an August 23 to April 2024 upper bull channel line. This one will not die, as in January the market played around the upper time, and in late January going into February the market played with the middle time, and thus I still suppose does, standing in between the two times. I asked the question 17 weeks ago when prices were higher, whether, and I quote, "The question now is whether the market will falter here much as it did in late May, or will it really go for the higher price?" End of quote. I had added to this by my words of 11 weeks ago when I said, and I quote, "Keep a careful watch on the 29.40 zone below and what may or may not happen." End of quote. Early to mid-November last year, we saw once again prices test down to the 29.40 zone and fight shy of fully pushing lower. But in January as this year, they pushed lower despite a mid-January limited change of mind. All this promoted by the bearish action of the small double top formed in late November and December last year. Last week prices moved down to test another support, the purple highlighted lower time, currently at 28.24 of the somewhat newer February to August 2024 bullish shift pitchfork. This was not a good support, as only the middle time had seen any action until then, but it did erode the bearish potential of the move somewhat, such that this past Monday saw a combined key reversal up and bullish engulfing pattern up to that breached, possibly broken, purple lower time. One final feature, and perhaps this is the more significant of the new features, I should say, and that was all these moves back up and down gave me the opportunity to draw a new bright green late December 2024 to mid-January 2025 bearish Andrews picture, which is showing some promise in identifying the recent bearish angle of attack. Prices cropped down to the middle time, but have recovered up to the upper time, currently at the middle time's at 27.30, up the upper time currently at 28.38, where there seemed to be some evidence of stalling the move higher. I'd watch this bright green bearish Andrews pitchfork closely, even should it happen, even if it morphs into a less aggressive bearish shift pitchfork for the same move. This one might just be the way we move lower now. So, caution. LME 3-month tin. There's one pattern on this daily chart which I've spoken about before, and possibly 2, maybe 3 others that I've developed since my last commentary. The pattern I spoke about before is, and I quote, the bright red neckline, currently at 33.10, of the uneven August to November 2024 head and shoulders top. This bright red neckline is closely aligned with the long moving average, and I said about this long moving average 8 weeks ago, which is now 15 weeks ago. And I quote, this is a key level, and it asks the question of this market whether it will bounce up from it as it did in late July and early August, as well as to a certain extent back in early September, or will it break it and test the late July base congestion between roughly 28,835 to 29,005. There's a lot of overhang in this market, so if it does break, then it may reach down to the previously mentioned neckline extension for the October 23 to January 24 reverse head and shoulders bottom. End of quote. I added 12 weeks ago, and I quote, since that time, that is just about what the market has done. I said the following 5 weeks ago, so that's now 12 weeks ago. I said the following 5 weeks ago when I was actually forming my commentary at the time, and I quote, prices broke down through it with a vehemence, punching down not only through the gold long moving average, but also the July 23 high at 32.05 and the next congestion at 29,880. This move lower has prompted me to look at the whole August to date action as a possible head and shoulders top pattern, with a neckline that is just below the gold long moving average. Now, this move lower, being just today, so that's back then, is not as yet confirmed, but because of the size of the break lower, I feel obliged to at least give some potentials for any move below the proposed head and shoulders top. Thus a primary potential be down in the 29,030 zone, but secondary harder to reach potential down in the 27,170 zone. End of quote. By mid-November last year, prices had reached what had transformed from a potential to a primary target. And by the end of November last year, reached down to 27,200, within $30 of the harder to reach secondary target, enough for me to call it achieved. We have since then had reactionary moves back up and down, caused I suspect by the bow tie formation seen in the moving averages start of December last year, and capped by the mauve medium moving average overhead currently at 30,515. These moves since November to now have created a new pattern, a possible ascending triangle come ascending wedge pattern, capped by the dark green upper trend line currently at 30,800 and supported below by the bright green lower trend line currently at 29,690. We are far enough along this pattern that next time I will start looking at potentials both for breaks up and below. Additional to this, I have had the opportunity whilst looking at the longer term charts to draw a November 23 to November 24 bullish shift pitchfork. And it is the lower time of this bullish shift pitchfork, highlighted in purple on my daily chart, currently at 29,440, that though not fully tested, has added further support below the market. Furthermore, below this, we have the old neckline, currently 29,215, of the October 23 to January 24 reverse head and shoulders bottom, which though being breached many times in November and December 2023 and January 24, still managed to erode the bearish incentive. I'd only add that a little below these we have the 28835 to 29005 congestion zone, a breach zone, but useful still as an eroding agent on any moves lower.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.